How's it going, everyone? It's Louis Crypto here, back with another Hbar update for you guys. I hope you have been enjoying these past few updates. In yesterday's video, we were talking about the CPI data and what the expectation could be from this technically bullish news event. I believe that the whales could use this bullish event for the retail investors, thinking that it's a great time to buy as a sell signal for themselves. So if we scale into the 1 hour time frame now to see in a bit closer detail where we made the video yesterday, which was on this candle over here, we were expecting, well, the suggestion was that as this is a bullish news event, you know, the inflation is still increasing, but less than expected. So that's great for cryptos in the short term. Retail are definitely going to buy that sort of event. And this is where I suggested that the whales could use this bullish event as a sell event for themselves. And we can see that from that candle, we went up a little bit, failed to break that high over there. We needed body candle close above that wick, 4916. And so we failed to do so. We got wick rejections with a shooting star followed by bearish engulfing, and then we continue down another bearish engulfing down to here. So yeah, essentially what we were suggesting did actually occur. You can see that we came back pretty much to this previous double bottom neckline over here to retest it. So that's why we're getting this initial bounce. And you can see over here we formed another double bottom. So what we need to see going forward is another break over here of 4859. So you need to break 4859 over here with a 1 hour candle close. Apologies if you can hear my dog Ivy snoring. She sits next to me in the office while I'm doing these videos because she doesn't want to be alone. But yeah, when we scale out to the daily time frame, that retest was of this previous double bottom over here with this wick, and we can see on the daily time frame that we're still currently holding the key moving averages as support. So although yesterday we did have attempts of breaking down before the daily candle close, we reclaimed it, and the same today, where at the beginning or in the early hours of the day, we can see that price did manage to come down again and then reverse, and it's looking to continue upwards towards that 55 moving average, sitting at pretty much 5 cent psychological level exactly. So we would need to flip that into support to head higher to our technical targets. We already explained on the channel why we have these targets much higher. So we have an inverse head and shoulders over here, taking us to about 6.637 cent. But we've also got this arrow that I've had for many weeks now, ever since we started, not even down here, as we have started to come back down. I put into this arrow from this location all the way up to the golden pocket because we met the 1618 target. We've reclaimed it after losing it over here. I also managed to call this pump ever since this low over here because the 1618 is our target. Target was met. We usually tend to reverse in the short term at least. And with that, if we are to invalidate any further downside to these targets, as there were a few people in the comment section over the past few days suggesting that they believe that price could come down here, I also mentioned that to invalidate that, we need to reclaim that 1 fib level, head towards the golden pocket and flip that in support. This is what we were talking about in yesterday's update. And if you weren't here, many of you didn't tune in yesterday, unfortunately, but go head to that update. It was very detailed. And essentially to invalidate this downside target, we need to go ahead and reclaim that 1 fib level and that golden pocket. But we're doing those things in the short term that are good. So even if you are a bull, this rejection is nothing to worry about, because as we're coming in for the very first time, it's a previous support. It has to be resistant. So it makes sense that we get rejected at that 1 fib level. And so what we need to then do is just hold this low, form a higher low at some point. And so that does mean you can technically come all the way back down to there, but it would be very impressive if we can hold the level above, clearly stating that this is a higher low. So we do have that at the moment. I guess we can now suggest that this is a potential ascending triangle. So we now have another bullish pattern over here. Let me just draw the neckline, which sits at 5203 right over there. And then we've got this ascending support. So we're going to be coming up into this apex. A move will be forced before the 29th and the 5th of August or even the 29th of July. So before the end of this month, we're going to know whether we go up or down. But we've got multiple things suggesting to the upside. It doesn't necessarily mean, although there's higher probability chances of going to the upside, that it 100% guarantee will. It's not the case, guys. But it's very good signs That's, remember, we need to hold this low, and by doing that we're creating higher lows, and essentially this is our high that we need to go ahead and break. So we would expect a break of that at some point before the 5th of August or even the 29th of July over here. So let's see us breaking through this, flipping it into support and heading up to our targets. I'm now going to get you the target out of this ascending triangle. It's essentially going to be a little bit, yeah, pretty much in the same location. I was going to say a little bit higher, but yeah, exactly the same spot. So many things telling us price could be reaching this level, which is a previous head and shoulders. So left shoulder and right shoulder. This is where price is looking to head to, essentially. So we can even draw a box over here. I'm just going to leave it for now because I've got these lines signaling that for me. But I hope you've been enjoying this video so far. Please don't forget to subscribe. We're on the road to 7K. I'd love to get there as quick as we can. So if you can share these videos, that would also help. But liking and commenting is the most important metric, guys, to help get these videos out to more like-minded people like yourselves. It really is appreciated. So to continue over here, if we now scale down to the lower time frames, maybe look at the 4 hour, we can see that the high that we need to break, as we have already analyzed the 1 hour time frame, which we will go back to, don't you worry. We are still beneath the 200 EMA after rallying into there last night. I think no, it wasn't last night, it was, yeah, sometime yesterday in the morning. And yeah, we've basically ran into that 200 EMA, previous resistance to the left. So got a nice area of resistance over here that we are still holding, looking to fall back to these key moving averages. Oh, my mistake. It was essentially falling back to these key moving averages. There is still a risk that this is a corrective move up to get another retest of the lower end of the ascending triangle. Remember, you can fall to this on the daily time frame. It looked a bit more well respected. On the 4 hour, we can see there are some fake outs over here, but this was drawn on the daily time frame. So we know that even if price does a correction like this and it has a little scare, we come back underneath, we just need to make sure that if we were to break down, that's the daily close underneath. Otherwise, it could be just a fake out where we come back inside and look to head up. Just keep that in the back of your mind. If we do get this sort of rejection, correction over here, where this is a wave 1, 2, and then 3 down into this zone, and then eventually you're looking for that continuation to the upside to break out of those multiple bullish patterns that we find ourselves within at the moment. So we do have a higher probability chance, like a 66% chance to the upside, but we need to keep in mind what the moving averages are also saying. They're saying, like, look, price is beneath them, so wouldn't be surprised if we do come back down. We need to hold this higher low. So essentially you can come down to the 1414 again, but as we of course already bottomed out there, let's form a higher low maybe in this region over here, and then continue higher if we were to correct lower. You don't necessarily have to, but as this is just like a quick wave down, that's why we could potentially correct up and then continue lower. We can just continue higher, but at least I'm preparing you guys for what the moving averages are actually suggesting. As we are still beneath this, the expectation is not that, it's downwards actually. So we need to go ahead and invalidate that path by holding a key level of support. That could be where we are right now and have a go. But if that fails, we got this ascending triangle support, which we saw on the daily time frame. Let me just scale back to the daily time frame so you can actually see this. So yeah, don't be too worried if we come down to here. We would need daily candle closes to hold it above this, but you can see on the daily time frame we are still holding these key EMAs over here. So it's a little bit different to the 4 hour. So essentially this rejection could just be taking us down to here and then pushing us back up if we weren't to do this. Okay, so that's why on the 1 hour time frame, well, I'm showing you this wick over here that we need to break on the 1 hour time frame out of this smaller double bottom. It can become an inverse head and shoulders over here if we were to dump one more time, but as we're above the 1 hour 200 EMA over here, technically bullish, any dumps into there should be brought back up. On the 4 hour time frame, again, yeah, essentially we got these lows over here, so just maintain these lows, and then yeah, if we were to dump off a little bit, continue higher eventually, as long as we maintain that. But we are currently above them at the moment. So can we break through that wick which we just suggested, backtest its support and break through this 200 EMA to actually get up to 5 cent, which is where we now are targeting. As we see on the daily time frame, this is the 55 moving average, and so this should be a target while we are above the 12 and the 20 over here. This should be our next target up at 5 cent, which would be a push of about, let's see, a 3% move, so it's not the greatest, but at least, yeah, we know where price wants to go as long as we maintain this bullish, these supports, essentially, these ascending supports. So let me know what you personally think is going to happen with Hbar in the comment section below. I really want to know what you personally think. We've got a multiple bullish patterns setting up at the moment, keeping in mind that we do hold the 1618 and the 1414. Price should then continue higher into this next key level of resistance, which so happens to be previous support, but also the 55 daily EMA, as well as it being a psychological level of 5 cents. So this is a brick wall that we really need to break through. So even if we do get a pump into that, could get rejected again, hit this ascending support, this would probably be one of the greatest entries, as this would be the third retest over here. So if we do come back down to this trend line, I think that would be a nice entry, whether that's to DCA or to leverage trade or to spot trade. That's completely down to you, but I hope this has been informative for you guys today, and then you can essentially do your own analysis and make your own judgments and have this in the back of your mind. Thank you guys again for tuning in. Don't forget to like, subscribe and comment. It really does help grow the channel. And if you want me to teach you one-to-one or do a video course in your own time or be part of my Discord community, just private message me on my Twitter. You can find all the links in the description down below. Cheers.